Hey, everybody. Here we are with Conrad Zerini, number one broker in North America, Brian Hogbin, number one mortgage broker in North America, and myself. I'm trying to be number one, and it's been a tough
You
go.
are number one. What are you talking about? You're number one in Canada, man.
That's it. Thanks. But what's happening in real estate this week? So we've had, real estate market still tilted in a seller's favor. Like, what is going on? Conrad, this is the first time in history, and correct me if I'm wrong, where interest rates are rising and prices are rising. Usually, if interest rates rise, house prices come down. We did have our readjustment of real estate last year. Now we're back on a level, and things are still climbing. I just can't believe it. Like,
the fundamentals are there, right? Look, for instance, you got a big wave of immigration, and Brian can tell this story better than I can. But how many immigrants? There's got to be 500,000 immigrants that are waiting for their 2-year in terms of their to get their financing, and they're ready to buy. They don't care the interest rates. Unemployment's low. It's a great climate. I think new buyers are just looking at the interest rate, saying, "Hey, I came from a country where inflation was like at 90%. I couldn't buy a house. I can't wait to buy here." And that's what's happening. There's
yeah,
no
1.2 million was the last 12 months. I saw last 12 months, 1.2 million people. It includes like temporary workers and permanent as well too. But 1.2 million is a lot of people. If people aren't selling their houses as much, demand goes up.
No kidding. I just find it like incredible, like, for what it's happening. Like, our corrections happen quick. Like, it's like we had a 9-month correction last year. Boom. Now we're back just like on the seat and just keep going. And
well, I think a lot of people have, like, I know what we're seeing. A lot of people exercise the rate holds from about 2 months ago. So there's a big flurry of people out there right now that they might have a 5-year fix that's held as a pre-approval in the high 4s right now. Yeah. So they're like, you know what? I'm going to jump on that. And I think also too, when we see the new clients that are coming in today, rate's always a conversation, but it's not a scary conversation anymore. It's just this is the rate, this is what I can afford. And I think it's really acclimated to normalcy now. It's just, this is where we're at. And people are deciding to get in the market now.
Brian, have you bought anything in this year, did you put an offer or buy anything and didn't care about the rates?
Yeah. Something I closed on it. It was a triplex, and I closed Q1. So I closed.
So that didn't scare you, Conrad. I mean, your purchase. So yeah.
I did a refi.
6.9. So it's 6.9%, and I was like, okay, what? It made sense.
Awesome. And Conrad, you did a refi. Didn't scare interest rates.
I did a couple of refis, and happy to do so. Pulled out, like, instead of, you know what, I could have kept, the same amount of money, pulled out some more money to do some more, just so, waiting on the sidelines, right? So, yeah.
I did the same thing too. And we're telling people now as well, like, if you have the opportunity to leverage up your primary residence, because people still I took out a little bit bigger line on the house because I want to be available. I want to be liquid and have that opportunity available. And I think, especially if there is that mortgage rule change or something changes and they don't allow you to do it, or they claw it back a little bit more, it's better to have it available.
See that? You know what I mean? So obviously, all three of us, business people, we're not afraid of it. So if you're a consumer out there that's looking, I get it. I get that interest rates are higher, but I think it's going to be the new norm. I'm not sure where it's going to land, but I don't think it's going to go too much higher. But I mean, the government's trying to control it because inflation's still going up. Housing prices are still going up. You know what I mean? Like, they may end up putting it another quarter or another tenth, who knows? But
the Fed went up a quarter, right, this week.
Yeah.
The Fed went up a quarter point. So, and the good thing too is because Bank of Canada takes a holiday in August, so we've still got a whole bunch of numbers to come out in August, which will drive the decision in September. Right.
Awesome.
And then, the minutes from the meeting were very interesting. It was hot. It was highly debated about whether to increase or to pause. So it's interesting. So you're probably, like, there's some good indications that they're kind of giving us a warning that maybe Q1, end of Q1, maybe we'll start to see it relief. But don't get all anxious and sit on the sidelines, because by the time that happens, you know it, Rob, Brian, you know it. Like, we're seeing it inch up. Like we were talking about Hamilton East. one story is up 10% in the last 3 months.
You got to be kidding.
About that quarter point, it's going to be meaningless if it starts rolling back a quarter point on your mortgage. Who cares? You're losing it in the you lose. You win the battle, but you lose the war of prices increasing at a rapid rate.
Or you're heading into competition then again, right? Because we saw it as soon as they paused. We went hockey stick, right? The price went up. So if we pause or see a decrease, whenever that happens, how many more people are going to jump in the market? So
it showed Hamilton and surrounding areas. And correct me if I'm wrong, Conrad. Is it 40% of the homes went over asking that sold?
It's about that. Yeah,
40%.
Depends where you are.
Depends. Yeah. I just did all Hamilton surrounding areas. Now Burlington, 44% with. And I got these numbers yesterday, and 2.1 months of inventory with 44% over asking. Now Niagara, they're struggling out there they got 5.2 months of inventory out there.
Yeah, and they were the lowest because my numbers, there was 484 sales and 134 went 100% or over. So they're the smallest percentage of all.
That's right. There were like 27% that went over asking. So now, do you think Niagara is kind of like the late one that eventually it catches up? Or do you think they're kind of like they're peaking and that's why it's a little slow? Like the income in Niagara is nowhere near, I don't think, is Hamilton or Toronto. So maybe that could be slowing it down and the prices went up too high too quick there.
Yeah, and I think you're right. There's no question. We saw some things happening in Fort Erie that should have never happened, right?
Oh, no kidding.
no disrespect against Fort Erie, but anyway,
I think Welland is in that category too.
Fort Erie. Yeah, Welland. Sorry, guys. But yeah, I think there was some. Again, those markets always are like that, and you're right. I think they trail. I think Niagara trails. Probably 2 to 3 months behind in a lot of cases, right?
Yeah.
So. Yeah. And if they go dead, if they catch up in the dead of summer, then, let's say they're 2 months behind, they catch up in the dead of summer, then you got that seasonal issue, which happens. And that just as a double whammy to slower. So it could push it out maybe 3-4 months, depending on when that whole thing falls, right? That burst of energy and buyers, right?
It's insane. It's insane. So now, Conrad, you were mentioning the most searched properties, the area in Hamilton. What was that?
It was Hamilton East, and there's been, because Hamilton East, like I said, the price point, you're talking the benchmark price in Hamilton East is $550 for a single detached. Guys, you can't get better than that. Like nowhere. It's barely $500 a square foot, including land.
Wow.
I don't think there's very many places where you can get that kind of value. And there's some new development going on there, so there's some activity happening, and it's a really good, nice little spot, close to highways, great transportation corridors, the link, and all that stuff, right?
What about Niagara? And did you end up seeing that at all? Did you end up checking that out to see if there was most searched areas in Niagara at all? Was it like?
Believe it or not, last week you're not going to believe this. Last week was Fort Erie. So it's very much price point. I'll tell you something. I think affordable is the key word here with people. And I think they're really looking at affordability right now. And I think it could be like what we were saying earlier. It could be these immigrants that are looking that, hey, I'm about 3-4 months away from being able to buy. And they're looking for affordability, and they like detached affordability. It's a strong on their radar screen. So yeah, Fort Erie there was 4 properties in the top 10, and they were in Fort Erie last week. So it's pretty amazing.
No kidding. Mm-hmm. So I'm also finding that there's a huge struggle for people finding places to rent. We were talking about this yesterday, Brian. Like people are offering $100 or $200 more a month just trying to secure a rental place. So that's driving the market up for rentals. And do you think that's the cause of people being depressed and they end up being homeless? They just can't afford where they are. They're getting kicked out of their houses and apartments or whatever, especially houses. Right now, a lot of houses are getting flipped and getting sold. So whoever's renting those, they're going to have to pay $500 or more a month rent wherever they have to go. And they're not going to get the same. They're not going to get the same house. Sometimes people are going from house to apartment. Like, is that going to continue? Like, what's going to go on with that?
Well, front page of the Spectator today, I don't know if you saw it. It was this thing about a lady that bought a house. She can't move in because the tenant won't move out. Right. So, I think that's going to continue for a long time. Definitely.
Yeah, and I think,
yeah.
No, I
Go
agree
ahead.
because I think like I've had like even when I had investment property where rents were very, very low and it just made sense to sell the property because to access the equity and leverage it up again, I'd be underwater. So it actually makes sense for another person to come in, move in. And I think you might see a lot of investors that end up saying, listen, like I don't want to do cash for keys. I don't want to be that type of landlord. And I know there is stuff like that going out, but so I'll just sell my asset. And then someone who moves in as a primary resident, now that person's just out. They're out in 60 days. And if they're paying $1,000 a month, they're in a shitstorm then, right? Because they got a very rude awakening. And those people, I think, are the ones that are hardest hit. Yeah. Because even though cash for keys has a very, very negative connotation, the one thing I will say is that at least someone's getting a bit of a nest egg. And I'm not condoning it, but I see lots of people doing it. And if a tenant's getting $10,000 or $15,000 or whatever the price point is, they're getting something to move. But when an investor sells their property and someone uses it as a primary, they're getting nothing.
Oh, absolutely. You're right. And you know what? I was on the social media and there was a guy on there one time saying how you can screw your landlord and not pay rent for 9 months to a year. And I'm like, are you kidding me? I go, do you realize what you're going to put that person through? Because you think they're going to be able to put an application in on something else and get that unit? With the amount of shortage of rental properties right now, you don't think landlords are scrutinizing and inventing and checking every single person that is on there? So if you got a small little problem, guess what? You're not getting that place. Even if you're going to pay 6 months in advance, forget it, buddy, because
I'll tell you, yeah. And just on a note to all the landlords out there, the smaller landlords, because it is hard to collect blood from a stone, right? But what a lot of people are doing now is they're going to a collection company and registering it as a collection. So guess what? If you beat me on rent, c'est la vie, I'm not going to collect it, but I am going to get a collection company to register it on your credit report. And then that way, all landlords are checking credit reports right now. And if they see that collection, same with the mortgage company, do not pass go. Do not collect 200. You're not getting into that new unit, and you're not getting a mortgage.
Absolutely.
You know what? And I love that because eventually you will get your money because they have to pay that out if they want that mortgage, and they have no choice. Now, can you put a collection on somebody without having a social insurance number?
Ooh, that's a good question. I don't know, but what we partnered with is a collection company. Right. So you partner with a collection company and essentially what you do is you sell them the receivable. So let's say if they owe you $1,000, you can end up saying, hey, listen, I'll sell it for 25 cents or 50 cents on the dollar. And it's their business. And I'd rather take 25 cents or 50 cents on the dollar, write it off. And then, but they know how to do it. Like they know how to register. They know how to do all that.
Let them deal with it. Yeah. That's how they make their money. So the best thing to do is if you're getting a tenant, putting an application in, and you're going to take that tenant, get his social insurance number, driver's license, everything, so that when you want,
everything,
you want to do collections, you want to go down to collections. Guess what, buddy? You're not gonna. I'll get you. Maybe not today, like you said, but I'll get you either 5, 10, 20 years down the road. You eventually need credit from something, and they're not going to give it to you. They're not going to give it to you. But yeah. So these bad tenants out there, be careful, man. I'm telling you, you guys, it's going to get tougher and tougher to find a place. So anything else happening in the market right now? Anything that you're seeing?
Yeah, interesting thing lately. We haven't seen land sales in a long time, but there was a property in Lower Stony Creek, a nice chunk of land that went in multiple offers, believe it or not.
Which
went
one was,
for a premium. It was in Lower Stony Creek, about 20 some odd acres. And it was.
Where was that? Was that on Jones or Highway 8?
It was Barton, I believe. It was on the north side of Highway 8.
Oh, okay, gotcha. I wasn't sure if it was one
north
of those.
Side of Highway. Yeah,
no
and it went in multiples. Which is a very interesting fact. You know what I mean? And there was a bunch of people at the table. A local builder that had lots of inventory there already. Of course, you got to pay the premium when you've got inventory around you, right? So,
right.
But anyway, it was amazing that it went in multiples. So, that's something we haven't seen in a long, long time.
Wow.
In terms of land. So that means things are breaking, things are kind of moving, and I think pricing is kind of catching up to new. It's got a little bit of ways to go, but I think we there's the right momentum. It's in the right direction.
Do you think? Okay, one last question. Do you think the government will ever allow builders? Okay, no HST on houses, new homes, no HST. So like, there's like $100,000 on HST.
Yep.
On like let's say it's an $850,000 house. It could be $750. Like,
well, I think you're going to see something like, you know what? I don't know. I don't put too much into the Trudeau government, but they did shuffle the, I don't want to be partisan here, but they did shuffle the cabinet a little bit. Yeah. They're preparing for the next election. Economy and housing is their top priority. So you might see some candy, Rob. You might be there.
Looking forward to it. Looking forward to it. Anyway, guys, thanks a lot for being on, and we'll see you next week. And catch you later.